In the first round of renewables, Standard Bank closed 11 out of the 28. And this can be attributed to quite a lot of factors. I've tried to summarize some of the factors that we think the government played, which Dr. Barnard actually spoke about quite a lot, and also what we see in terms of the market and the market structure that's important in terms of making sure that the program was sustainable, and this creates a platform for being able to replicate it across the continent. So in terms of successful IPP investment, some of the summary of from our perspective, what we think is important that's in the purview of the host government or of any particular country is about 6 factors, and I'll just run through them very quickly. First one is the favorable investment climate. I think the work that goes into making sure that the country is a desirable investment destination is very important, because we're talking very large capex and capital commitments, and the climate has to be such that investors will see easily where they'll be getting their returns and the security of those returns and the environment. Then the clear policy framework, which also includes the electricity industry structure. As Dr. Barnard has mentioned, we went through a process in South Africa from the white paper of '98 through the IRP, the establishment of the single buyer office, the set aside of the Department of Energy, actually splitting it from the Department of Minerals and Energy. So that was quite important. Then fair regulatory oversight, an independent regulator that is able to, and in the South African instance, in fact, vehemently protecting their independence, and we saw between Department of Energy and the regulator that it's a robust and healthy relationship. But being able to get to cost-reflective tariffs and being able to give certainty in terms of the tariff path, which really leads back to the revenues that the IPPs are able to earn. The sector planning to ensure energy security, and not just dealing with the strategy for energy security, but also the risk mitigation and the ability to be able to deal with potential for blackouts, because that can very easily wipe out gains that have been made in terms of the pure IPP program if the entire electricity supply initiative comes under pressure. In the case of renewables, obviously the resource is free, but in the case of other IPPs, where you're looking at a fuel cost, the ability of the government to be able to deal with fuel cost issues and the security of supply of particular fuels, so that you actually end up in a situation where IPPs are more attractive towards cost-effective fuels as opposed to the more expensive type of fuels. Last but not least is the cooperation of the utility. In South Africa, Eskom, as a big monopoly, needs to be part of the process. They need to buy into the process. They cannot be excluded from the process. The ability to be able to set up an office that deals with IPP inquiries, to be able to share transmission development plans with the market, with IPPs, the ability to be able to give quotations on grid connections with clear timelines, and also the databases that actually get developed. Not only the wind database, but the solar databases, and the databases on the state of the grid are very important contributors to making sure that the IPP environment remains solid. On the more investment side, I think these are pretty well known, but what stood out for us was in terms of attracting equity and making sure about local participation. In South Africa, there was a set aside for South African companies, and that's important. So it gives the local players a chance and ability to buy into that. But they obviously need to be strong from an equity point of view, and overseas participation helped a little bit in terms of facilitating free carry. The debt arrangements, the involvement of DFIs is very important. And then the risk allocation matrix needs to be discussed very early in the process, because this obviously finds its way into the PPA, which has to be a robust PPA. In the South African experience, just sorting out the risk allocation matrix for this PPA was something that took a very long time and involved a lot of interaction with financiers, with various stakeholders, being led by government and the national treasury. You've spoken about credit enhancement earlier on, Hella, in your introduction, so I won't deal with that one. But the last one is actually quite important. Once an IPP is being licensed and is going through COD and getting into operations, the ability to maintain very sound relationships in the areas where the IPP is working within the country, looking after your contract, looking after key stakeholder relationships, so that your presence in the country and in the region is appreciated by everyone, and what you're bringing is appreciated by all the users of electricity.
Doing business in Africa, you can't afford to be without Africa Investor.